Welcome to Corporate Roundtable. I'm Rick Kaplan with my guest today from Freedom Venture Investments, as Dave Seymour. You see up on my left, I don't know how you see it, but it's Dave Seymour. He's the Chief Executive Officer and star of A&E's TV show Flipping Boston. And then you have Kevin Harrington. He's the Head of Business Development, and you see him on the bottom right or below me. And he is one of the original sharks on Shark Tank. Good morning, Kevin.
Hey, thanks, Rick. Good to be here.
And then we have Walter Novicky. He is the Chief Investment Officer for Freedom Venture Investments. And Walter doesn't have a TV show. We got to find one for him. So if anyone has a TV show they need Walter on, let us know. So we're going to ask the first question, which is, what is Freedom Venture Investments all about?
Yeah, I think I can answer that.
What private equity funds are all about?
Sure. I'll hit that out of the gate. So Freedom Venture Investments is it's an investment firm, just like the title says. It has been really in its development through over an 8 to 10 year career that I've had. We put the company together a year and a half ago. It's had various, strategies, if you want to call it that. But as COVID hit, we saw an opportunity to pivot. I've had many conversations with Kevin about this in the sense of, in business, are you ready to pivot when a circumstance or a situation arises? And what Freedom Venture Investments did was I reached out to Kevin. I reached out to my connections in the real estate marketplace and put together a team. And what we did was we created a real estate equity fund. And basically what that means is we raise private capital and we deploy that capital in commercial multifamily real estate. But we do it across many acquisitions, not just one piece of real estate, one group of investors. Maybe your listeners are familiar with that, Rick, in the sense of a syndicated deal. Walter, as he'll share with you his track record, but we've taken that business model of one unit at a time, raising capital, paying back interest, paying back equity at the time of resale. We put that on steroids because of the opportunity that we saw that COVID was going to create in the marketplace. So Freedom Venture Real Estate Fund is a private equity fund, raises capital, puts it to work in the marketplace. We have aggressive targeted returns for our investors. And then the good-looking gentleman that you see on the screen, we drive the ship. That's the best way to put it. We drive this ship. We manage, we operate, and we implement the business plan. So kind of big picture, but I think you get the idea.
So as your Chief Investment Officer, Walter, you're the one that is, are you finding the investments for the company or?
Absolutely. That's how I spend my days. Little history on me. I've been in real estate for 34, going to be going on 35 years here in a few days. Most of my time, the past 2 decades actually, has been dedicated to doing business in the Florida Gulf Coast region. Doing multifamily development, a lot of ground up construction. So over those 2 decades, I built a network of individuals that are all kind of peripheral individuals, people that help me find the deals, people that help me finance the deals, people that help me manage the deals. So what we're doing is we're leveraging the 2 decades of experience that I have and successfully implementing the strategies on a single investment by investment basis. And now we're doing it on a fund level.
So you're familiar with the downturns and the upturns of the industry, and being in it for 35 years, you say?
Yeah, going on 35 years. Yeah, I remember 2008.
You don't look that old, Walter. Kevin,
thank you.
Way too good.
Well, you know what? If you're in this industry for 35 years, you could be. Walter could be 20 years old, but he looks like he's 60. It ages you quickly.
Absolutely.
So, Kevin, what opportunities did you see? Because now we have this COVID-19 that's been around, and everyone was a little nervous what was going to go on with the economy and all that. And you're seeing some kind of a vision.
Yeah, so I have my background over the last 40 years as a serial entrepreneur it has been in the world of products on television, as seen on TV, Tony Little, Jack LaLanne, George Foreman, Billy Mays, all that kind of stuff, right?
Great
Now,
stuff.
the challenge with the world of products for me as an investor, when we would sell Tony's product or George Foreman, whoever it was, the sales cycle would go like this: very successful, hit a peak, and then the backside of the bell. It was a bell-shaped curve of success. You'd have success, and then people, just like a movie, people go watch the movie. It's hot, it's exciting, and now it's out of the theaters and it's on the backside. The real estate investing is not a bell. It doesn't go like this. It goes like this because the values are increasing. There's long-term lifetime values. And those that get involved in real estate, for me, when I was sitting there watching Dave on TV and watching all these deals, I'm thinking, I've never really been a real estate guy. I've always been this product guy. So when Dave told me about what he was putting together here at Freedom Ventures, I said, this is a chance for me to really look at a different kind of a curve, and no curve at all, a straight line, hopefully for success.
Hey, Rick, I want to add to that a little bit, because it's kind of interesting that you've got, a shark from Shark Tank with Kevin's experience. It's important to know, and I know you're kind of humble at times, Kevin, but 500 different companies, right? Billions of dollars in sales. I think one of the things that makes us unique, number one, in the marketplace, but also number two, successful, is the fact that we take each of our core competencies and we don't get in each other's lanes. And, I reached out to Kevin for scalability. I haven't achieved what he's achieved in his career. And as he just said, he hasn't been in the real estate world and achieved what Walter and I have achieved in our own careers. So I think and I know my partners would agree with me, one of the biggest keys to success in entrepreneurship is the ability to find the very best at what you're not good at. And then you got to have reciprocity, right, Kevin? You got to bring value
Absolutely.
to the table. I mean, you talk about that in your book and the things that you do in business. So, I think it's important to highlight that, because somebody could say, well, why would I listen to Kevin Harrington when, he's not in the real, no, he's one of the best entrepreneurs and business builders in the world. And, that's why I hunted him down. And also Kevin's in our market. He's in Tampa as well, right around the corner from where Walter is. So we can, we have that ability to touch the real estate meet as often as we need to. So, yeah, I think that's important to put that out there.
Well, as a former CEO myself, I understand that, you have to, the best way to build your business is to find what your strength is, and replace your weaknesses with people that are stronger in those areas.
Yeah, for sure.
That's a successful company. So now some of the people that have signed up for this or are listening right now, they had some questions for you. So how you can answer them, I don't know, but we're going to give it a shot. Someone just sold a multifamily. You want to know what investments would help save them on the taxes. And Dave, you probably could answer that, or Walter, I think.
Yeah. So what, capital gains? They've got a capital gains on a three.
I'm assuming they would have capital gains.
Look, if you're set up properly and you've already put the 1031 exchange in motion, which is the ability to roll any capital gains into a like type property, then that's an absolute no-brainer. We were just talking before we came on air. That might be under the microscope with a new administration if it gets through in January, but we'll see what that looks like. But definitely a 1031 exchange. And look, big picture, without delving into the details, I'm not being your accountant, your attorney. I'm not giving anybody any financial or legal advice. At the end of the day, real estate has always been the number one tax shelter that's afforded us as investors. So always real estate for protection.
And actually, I see that one of my former guests on a different webinar, Michelle Fitzpatrick with Northern Bank, she specializes in 1031. So I'm sure she's probably curious to see what's going on with you guys. As
You're
a matter of
welcome,
fact,
Michelle.
Hi, Michelle. She goes, so, that's always people are always interested in finding out more about 1031s because it is a great source for people, especially in what you do. That tax savings is incredible.
Sure.
So let's go back to 2020 and 2021 and the projected land and redevelopment properties, the pricing, value trends in Boston and outside 128 belt. Obviously, they've gone through the roof, and the land is getting scarce around here. So is this an area that you would focus on?
So for my partners on the call here, both Florida guys, they might not know what the 128 belt is. So I'll hit it real quick, fellas, just so you understand.
Well, just so I can clarify that a little bit, the 128 belt, it's not necessarily just here, but in other parts of the country.
Yeah,
we're running out of land.
Yeah. No, look, here's the thing. We don't focus on Massachusetts for any acquisitions, land development, anything of that nature. Not yet. The reason being is in our opinion as investors, it's overpriced. The cap rates and the cash flow are constricted. So I learned a long time ago in my career to be able to invest where it makes sense. So we're not targeting land in Massachusetts. I mean, I was in Eastie a couple of weeks ago, and if you drive through East Boston, South Boston, Cambridge, Somerville, Harvard Yard, you go anywhere around any of those areas, all you see is wannabe, that's not fair. All you see is development and one house after another, after another, after another, and they're all under construction. Look, man, I'm not the best analyst in the world, but dear Lord, I bring a blue collar attitude to a white collar world, and that's called common sense. And it says if everybody is doing the same thing, it might be a really good idea to step back and look at the landscape and say, maybe something different. So I think it was Warren Buffett said, be a contrarian investor, right? Think about what everybody else is not doing and do that. So we focus on Florida. I mean, you could drive to Kevin's neighborhood, Walter's neighborhood, and there are beautiful, and I mean that sincerely, beautiful complexes that cash flow, that are looking for a little bit of love, that we can buy at cap rates that are more than double what they are up here in New England. And if you look for some data, there are more people moving out of New York City, out of these metropolitan areas in the Northeast, and they're looking for opportunity, and the opportunities with Freedom Venture Investments. I mean, that's really right. That's really what our business model is all about. So look, man, who am I? I'm just a guy with 12 years of experience, partnered with a guy with 36 years of experience, partnered with a gentleman with 40 years of experience. I don't know. You tell me. Does it make sense to go where everybody else is going, or does it make sense to do something a little bit different? That's kind of the way we look at it.
I don't know. What's this thing you call common sense? We don't know.
It's something my mother said I needed, and I don't know. I didn't listen to it.
Although you say that, but places like Maine and New Hampshire,
sure,
they're booming right now. People are starting to go up in those areas because there's a lot of land, and the costs are the costs were really reasonable, but.
I just sold out of a 100-unit portfolio in Maine that I had for about 4.5 years, and we doubled its value in 4.5 years. So when I'm selling, you should be buying, and when I'm buying, you should be selling. It really is that simple. I mean, that may sound a little cocky, but hey, it is what it is. I got it right so far.
Well, this is a question that is for Walter. What asset class of real estate would private equities be more interested in to invest at this time?
Well, our concentration has been in the core plus realm of multifamily. Now, one of the unique things that we are doing is we're actually targeting something that a lot of other people haven't targeted, and there's some good reasons behind that. Our mix is we're looking for units, projects that are 40 to 150 doors. Anything above that, once you start getting, especially 250 and above, that's where you're getting your large players. That's where you're having these REITs that are coming in, doing these massive acquisitions at these crazy, crazy low cap rates. And, you know, they're willing to sacrifice return for potential long-term gain. Whereas when we're coming in, we're concentrating on that 40 to 150. What we're looking for is not only a decent return, some good cash flow, we're also looking for the ability to improve that cash flow. So, you know, the Core Plus realm allows us to come in and use some of our expertise. Number one, bringing in, you know, the people on the construction side to come in and make the improvements that we're looking for that are minor improvements, but also bringing that level of professional management in. And that is the real game changer for us. By bringing that professional level of management in, we're able to improve our expenses. We're able to increase rents to market levels and really boost overall return to our investors.
You know, I have a few more questions, but I wanted to go back to Kevin. Because it doesn't seem like there's a lot of these questions fit what you're doing with the company. What are you focusing on as part of the team?
Well, so I think, I mean, let's put it this way, as original shark from Shark Tank, every time I would go and speak, and last year before COVID, I was on the road 225 days. I'm speaking at every conference, every entrepreneurial event. I'm at the Consumer Electronics Show in Las Vegas, the hardware show, the houseware show, the golf fair, so these are mass market kinds of places. But I also would speak inside corporate, Microsoft, AT&T, Pfizer has been in the news lately. I would go to a Pfizer, and we actually would create a Shark Tank style event at Pfizer in New York, taking pitches from employees and deciding which one of these are good things for the company to be moving forward with. So I am not, in the old days, I was pegged as a product guy, the as seen on TV guy. But I actually sold all those assets a number of years ago. I sold As Seen on TV Inc., AsSeenOnTV.com, because I saw the handwriting that here I'm in an industry, it goes up and it goes down. I want to be in real estate. So this is, it's sort of the point in my life that I've decided this is my next move, and who better than guys like the people that are sitting here with us right now, Dave and Walter. I mean, these guys have tremendous experience in this industry. So from my side, it's a natural thing for me to be able to have an outreach. I have hundreds of thousands of followers on the different social media platforms and things like this. So I'm I have a good opportunity to be sort of a brand ambassador coming in here, saying that I'm all in, and those that are following me should also think about coming in and taking a look at what we're doing.
Nice.
It's funny you said that, because we sort of have a similar avenue that we have taken in life. I was in the electronic retail business with box stores, brick and mortar.
Yep.
And, when you said the Consumer Electronics Show, that used to be my favorite time of the year. I used to love to go to that. I sort of see exactly how I never reached the kind of level that you reached, but I can understand your vision and what you're saying with that, because, you only have so far you can go with a product. And now you see an opportunity with the real estate, which is the same thing I see in real estate. So we both ended up in the similar type of arena, I should say.
Great.
There's so many aspects of commercial real estate, so many avenues of commercial real estate. Single family senior residential home or assisted living and memory care. So someone is looking to go into that in Greenwich, Connecticut. What do you think about something like that? Would you be interested in going in to that type of industry, part of the industry?
Are you talking to me?
No, that's just for anyone.
Oh, okay. I'll let Dave.
Anyone's welcome to answer that one.
Look, I'm not in that. I'm not in that asset class. However, I do know investors up here in New England who have aligned themselves with the services, component of that. Elderly housing, some disability type housing. There's, sober house, those kinds of investment opportunities. And to the best of my knowledge, they're a great yield. The only thing I would say to anybody is do your due diligence, run your numbers, right? It really is. As crazy as it sounds, real estate is fifth grade mathematics at the end of the day. When I can't create a spreadsheet, but dear Lord, I know how to read one. Bottom right-hand corner, that's the number that I want to see. And then I trust that my team has done all the work underneath it, right, to make sure that that number's as close to reality as is possible. I think elderly housing is a good strategy, purely because of what we're able to do in the healthcare field today. That demographic is growing. And look, man, it really does kind of tie into what we do. One of the reasons that we invest in Tampa, in Fort Lauderdale, throughout the Gulf Coast region is because it's probably the number one, number two retirement community in the US. And for every one retiree, it creates 4 jobs. So to Kevin's point, that's not going to change. It's not a product that goes up, manifests, and then goes down. Real estate does this, but it always is on a long-term trajectory. So, we kind of do invest in elderly housing, if you think about it, Walter, right? Because of the demographic that's so strong down there in the Florida marketplace. You cannot go to Florida. We used to call them, I'm going to upset some people, but I don't care. We used to call them Q-tips. Like when you drive in Florida, there's always that little old lady. She looks like a Q-tip behind the steering wheel. She's got that little gray bull funk going on. And don't try and jump the line of the early bird special. So anyway, look, if it works and the numbers make sense, execute.
So you're saying that if it's something that you would consider, you would probably take in another part of your team that would focus on like healthcare, and because healthcare and life science right now is sort of a big part of the industry.
Yeah, sure. And down here, there's that growing trend towards kind of a hybrid of an assisted living complex, and it is something that we are starting to investigate. Whereas you have these 55 and older communities, and then it's like a stair step. They have then assisted living communities that are attached to them, and then full skilled nursing facilities that are attached to them as well. That's a situation that's developing pretty rapidly down here. Just within a stone's throw of where I'm located, we have one that's 100+ acre complex that's absolutely stunning. Private golf courses, tennis courts, restaurants. It's like its own little village in and of itself. But like I said, it goes from 55 and over to all the way down through skilled nursing. So, that concept is a growing concept down here, and it's something that we're going to investigate as time moves forward.
Yeah, you just have to figure that you have to have 80% handicap parking as opposed to 10%.
Wow.
Lots of ramps.
Wow, that was not politically correct, young man. Can you imagine that? Kevin, I apologize. I really do.
God.
You know what I mean? I can't control the environment, brother.
So before I get myself in any more trouble, what do you think the trends of New York City office and residential rentals is going to happen there? Because, especially now with the COVID-19 going on. Do you have any idea what
Look, man, again, it's common sense and it's common sense and fundamentals again. Excuse me. The last time I looked at New York, there were 18,000 more apartments available for rent compared to this time last year, whatever that was. Connecticut real estate has gone through the roof because of the mass exodus out of New York City into Connecticut. Kevin is working currently from his home office. Walter is working currently from his home office. I am working from one little office because I downsized, and I have an 8-year-old and a 10-year-old son at home, and you can't work from home in my house. So, it's the ability to to operate today from remote locations has just manifested itself, man. I mean, you know, to Kevin's point, he was traveling all over the world, sharing his, you know, his entrepreneurial skill sets at various functions. And yet we can still influence from our home offices today. So look, if you asked me to invest in retail or office space right now, I politely say, no, thank you very much. I had one retail investor was looking to make about a $500,000 investment. And they asked me very, very point blank, Rick, they said, why would I invest with you when I can invest in this retail complex at 70 cents on the dollar? And I said, do whatever makes you feel happy. I said, but my sense is that I'm going to buy that same retail facility 18 months from now at about 40 cents on the dollar compared to the 70 cents on the dollar that you're paying right now. Because people forget that every asset class in commercial also follows a timeline of going down and coming back up again. And statistically, it's always been leisure and holiday that has gone down first, which we saw, right? And then after that comes office space. After that becomes light industrial. And then after that comes housing. And housing statistically has always sustained itself through all market cycles. So look, it's not my wheelhouse. Doesn't mean that there isn't money to be made there. I know some guys and girls that are taking down, you know, mixed use, retail, turning everything over to residential. We actually have a property now that has 10 small office spaces connected to the residential side. Walter walked the property. He's underwriting it now. It's going through our due diligence process. But the strategy is to take those 10 offices downstairs and make them residential again, because there's the demand for housing. So, you know, it takes some creativity during this chaos. Not our wheelhouse. Not going to say you can't make money, but it's not a strategy that we use.
Well, let's go. This is going to be a long question.
Oh boy. Oh boy. Kevin, do you have enough time for a long question?
Yeah, but this is a good question, because this is the type of people we want to reach out and give them the information. And this is to young people. How do you advise a young investor to break into high COL markets such as New York City, LA, Boston, et cetera, where the liquidity and net worth requirements are greater due to high property values? And it goes on to say, is purchasing a 3-family with another LP or two worth, is this late in the cycle for such low yield, or is a young investor better off purchasing a 2-3-bedroom condo as your primary residence, making use of FHA residential loans, learning about the nuts and bolts of owning property? And it goes on and on about that. But, you know, that's a good question, because, you know, young people who might be interested to get into the commercial real estate or real estate in general. Sure. What would be some advice you would want to give someone that's beginning?
I mean, I can take that just because it's been my wheelhouse for over a decade. I've trained thousands of you know, new real estate investors, young to old. You know, basically what that question is alluring to is the ability to purchase, you know, maybe you buy a 3-family property with an FHA 3% down. You hold on to that for a year or so, you refinance it, cash out, buy yourself a 2-family, you're still getting the rent roll from the 3-family. So each time you're upgrading, you take the 2-family, you hold that for a year, 18 months, you cash out of that one. Now you've got 5 units all giving you cash flow. And you have enough capital now to buy a single-family residence with a larger amount of capital down, so that your equity is still there, but you know, you're in a position where that monthly payment isn't choking you out. And if you're a young person, you're probably choked out already by your collegiate debt and you know, hurting in the first place. Look, as a young person in this game, it can be a challenge. You don't have a track record. Maybe you don't have the liquidity and the fluidity to get in and out of transactions. Educate, don't speculate. Learn as much as you can. Pay attention to guys like Rick Kaplan, Kevin Harrington. I'm going to plug your book, Kevin, because it's incredible. Kevin just launched a book called Mentor to Millionaires. Mentor to Millions, Kevin.
Mentor to
Great
Millions,
book.
yeah.
Yeah, Mentor to Millions. Get the book. Start learning from people who've been where you want to be. And I think here's the bottom line on it. I think is that it's really important to implement. Don't be somebody who overanalyzes and educates, the heck out of yourself without doing anything. So there's certain, strategies that I've used in my career from the very beginning on the single family residence world. And then that just snowballed into, a 2-family, a 3, a 6, a 10, a 12, 100 doors. And now, managing $100 million private equity fund, buying as many apartment complexes that fit our buy box in Florida. So there's definitely a trajectory in that, but educate and then implement. And if you do that, you'll stay the course.
Any other words of wisdom, Walter?
Well, the only thing that I would add to that, and I agree with everything that Dave said, you want to surround yourself with people that are doing what you want to do. So if you want to become a successful real estate investor, you need to go out, seek out those people, surround yourself with those people. That's just going to give you opportunity. That's how I got involved in this business 30 plus years ago. That's how I was able to grow my business. And today, that's what we're benefiting from, the relationships that I built. So surround yourself with people that are achieving what you want to achieve. That's gonna give you a path towards that success.
For sure.
Kevin, you have any wise words?
Yeah, I think I have over the years, I've been a serial entrepreneur for 40 years. And when I was younger, I tried to do everything myself. I wanted to pay people what I could afford to pay, as opposed to what I needed to pay them to get the right experts on my team. So if you only have the people you can afford, you're never going to probably grow. So once I realized, when I start bringing in power teams and mentors and coaches and guys like we have here on this panel today, Walter and Dave, guys that have been doing this for years, this is how I learned how to build businesses, is getting the best of the best on the team, building that dream team. And that's what we've done here with Freedom Ventures. So I firmly believe that this next round for me, jumping into real estate, teaming up with some amazing guys with track records that can't be beat, is a great way to go. And we're offering this to many folks that are out there to join us and join our team. So this is how I've done it in the past. And this, I believe, is going to be a great way to go for the future.
And I think you hit the nail on the head, because that's exactly what, people don't see. When they are, you have to have that clear direction, and you have to have the right people in place to get there, and if you don't do that, usually you can get to a level, but you're not going to be to the limits, that you can really meet. And I think that's exactly right. We'll move on to here's a couple of questions that, a private equity fund and a REIT. Some people might want to understand the differences between the two.
Sure. Walter, you want to hit that?
Yeah, absolutely. A private equity fund is exactly what Dave explained. It's basically pooling assets. We're using what's called a Reg D provision. So we're a Regulation D 506C fund. And what that allows us to do is that allows us to pull capital from investors. So we've created this fund. We have investors that will invest in this fund. The fund is going to go out, and we're buying assets that produce income, give us long-term returns. That's a private equity fund. A REIT is set up slightly differently, but the difference makes a massive difference in the overall return. A REIT is a security in and of itself. It's like a stock. It's like a bond. It's bought and sold. It's traded. The issue is, in my opinion, and it's the reason we've gone private equity as opposed to REIT. With a REIT, the driving factor for the valuation of the fund isn't really necessarily the quality of the assets within the fund. It's driven by market forces. I was just watching CNBC this morning. You have a lot of the companies that are starting to report earnings, and it just boggles my mind. A company beats expectations by 6%, and its stock drops by 4.5%, 5%. Same thing happens with these REITs. So, you're not getting a equivalent value and equivalent income based on the production of the fund. Whereas with the private equity fund, we do well, our investors do well. And I think it's just a safer long-term play for most people.
I want to jump in on that a little bit, because I was absolutely astounded when I started digging a little deeper into publicly traded REITs. That not only, like as Walter said, is their value not specifically tied to the assets inside the REIT, but also the contributions or the distributions that are made out of that REIT to an investor. So Kevin can put in X amount of dollars into a publicly traded REIT. Walter puts in X amount of dollars, and I can get paid my distributions as another investor off of their contributions. Right. It doesn't have to be the actual valuation of the asset cash flowing. And I found that to sound very much like a scheme that a guy named Ponzi put together a few years ago. That's what it sounded like to me. I'm serious. I told you before, it's a blue collar attitude, white collar world. There's some local ads running up here, Kevin, and I don't know if they're running in Florida. I don't think they are. But there's a company running ads right now talking about, X of billions worth of dollars under management, and they're offering 10% monthly contributions, blah 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 blah. And they talk about how it's all related to the real estate. And then when you do your due diligence and you dig a little deeper, it's a publicly traded REIT. So when we, like Walter said, when we went for this, we said, no, here's what we're going to do. We're going to find the very, very best real estate. He underwrites anywhere between 10 to 15 properties a week, inbound calls coming in, because sellers are now motivated to sell because of what COVID's done to their bottom line, et cetera, et cetera. So every property we bring in is valued on its sticks and bricks at the time we buy it. And then what we do to make it more valuable is the repositioning. So our investors are coming in knowing that they're owning shares in a company that owns assets, right? And that's the valuation of it going forward. It just made more sense. It made a lot more sense. And I think for me personally, it adds more authenticity attached to it, right? And for me, that's really what it's all about, is honesty, transparency, authenticity in these things, because we're dealing with people's retirement accounts. We're dealing with people's
so that brings up another
dreams.
question. Retirement accounts. Let's say someone has a 401k or a IRA, and they want to take some of that fund and move it into a private equity fund. Is that
Sure.
a possibility for them? And what is what would the availability be for that money if they're down the road they needed to pull it out?
Yeah,
is that questions. A possibility?
Yeah, great questions. Yeah. So the possibilities are yes, yes, no, no. You can look, a retirement account, the standard company 401k, maybe an IRA, those accounts can be rolled over into what are called self-directed retirement accounts. I'm sure your listeners are familiar with that if they've been exploring real estate for a while now. If the retirement account is no longer active in the sense of still employed, then you can take a portion of that retirement account and roll it over. We call this qualified funds. A big portion of our fund is based with retirement accounts. We have set up relationships with a custodian company called Horizon Trust. They are our self-directed retirement account provider. We can help anybody who wants to explore that. So once that capital is put into a self-directed account, as long as the investor meets all of the criteria to be in the fund, they can then put that capital in the fund. And we target double-digit returns, 10 to 14% through quarterly distributions in our fund, and a targeted 20% plus IRR on the value of that money working over time. And that answers your second point. When that capital is deployed, it is deployed for a minimum of 5 years with an expectation of 6. And when that money is in there working, it's working aggressively at robust returns. So it makes no sense to pull that money back out. So that's it's an illiquid fund, meaning it's not money in, money out, money in, money out. We're not day trading. To Kevin's point, we're not putting our money down on a new product, watching it go up and then come back down again. We're working over time. That's how we work that capital. And, it allows us to pay the returns that we target. I mean, we work very hard to put that money to work, so that we can get some traction here. If you think about it, you can, the knee-jerk reaction of the marketplace has been a deficiency for many, many years for people. Like, they've taken money out and gone, oh man, I wish I hadn't done that. Whereas not being able to take money out of the private equity fund, trust in professionals like this that you see on the screen to work that capital, really does offset the human emotion of, oh my God, I'm losing, I got to get it out of there. Whereas we know that we're going to work the capital over 5-6 years for the more aggressive return. So, that's the big picture answer on that.
Okay.
Hey, Rick, I just want to let you know my friend Kevin has another appointment. He's gonna wave goodbye to us right now.
Hey guys,
Kevin,
it's been
thank
fun
you.
hanging out. I think I want to make sure that any questions anyone has for me, we got answered, and I'm excited about our opportunity, and thanks for having the messaging here today, because we got to get out to the masses and let them know about our opportunity, and thanks, Rick and Dave, Walter. You guys be good. Any last things at all for anybody? For me?
I think we're good. You got nothing on the list, right?
No more Shark Tank?
No more sharks. Okay. All right. I'll see you on the next.
Thank you, Kevin.
Okay.
Thanks,
Kevin.
Thanks so much.
You, Kev.
Take care.
Thanks.
Bye-bye.
So yeah, look, Rick, the opportunity with self-direction is huge. I remember for myself personally, the first time I heard about it, I felt like I've been ripped off by my employer for years, right? Especially when I started looking at some of the lack of look, there's compounding returns and there's compounding costs. And when all I ever saw was what I thought was supposed to be a great return, but nobody ever really showed me what the value of a compounding cost was inside a 401k account. I got a little perturbed. I was going to say something else, but I said perturbed instead. But this is entrepreneurship. This is the 1%. Walter talks often, and I think it's important because it really paints a very clear picture. What we do at Freedom Venture Investments with the fund is allow the country club deals, right? These are the deals that usually went down on the 10th hole at the country club, and nobody ever got a look at them. They didn't, the institutions bought them, the elite bought them, the 1%ers bought them, and the average investor didn't have an opportunity to participate. And I think one of the hugest values is the fact that now, the middle class American, right, the hard-working engine of our country gets to participate in this stuff, man. They get to see these double-digit returns. They get to participate in upside potential. They get the tax benefits. I mean, come on already. Enough is enough. I was a firefighter and a paramedic for 16 years. Walter served our country in the military. Like, we stepped up and did what we were supposed to do. And then when we come out of there, we look at it and I felt like I got screwed over a little bit. You know what I mean? I'm going, what? Really? That's what's left is, that small 401k, and it was garbage. And I went on a mission personally to look at me. I'm on a soapbox. What happened there? Kevin left and now I'm rocking and rolling. But I'm passionate about it, as is Walter, as is our team. How do you get a guy like Kevin Harrington? You get a guy like Kevin Harrington, you show him a value offer that absolutely makes sense. And he said, I will put my name, my resources, the teams that I have to scale this up. We're talking now with investors in the UK and Europe because they know Shark Tank. They know Kevin Harrington. They want to listen to the message. So, it's a service-driven business for us. Real estate is sticks and bricks. It's fifth grade math. But then you got to really deploy that intelligence the right way with a business plan and a team that can execute. So, sorry, man, I went off on a little bit of a tangent. I do that once in a while.
No,
I
that's
get
all right.
carried away.
No, it's great to see your passion. People like to see that. Yeah, we have a couple of questions before we end this.
Sure.
Are any of the properties structured as Delaware statutory trust, DST, which are recognized as replacement properties for 1031 exchange?
Walter, that's all
Walter
you,
would
buddy.
probably
I
understand that.
know we can bring in 1031 exchanges, but I'm not sure on the
can.
structure.
Yeah, it's so funny you should mention that, because I was just reading an article, because they are going crazy with that vehicle. There is a way, and we have a relationship with actually a firm that specializes in how do you take money that traditionally can't go 1031 and get the same benefits of a 1031, whether it's investing in our fund or putting it into other investments. There's a way to do it. To answer your question directly, no, we don't deal with the Delaware situation. There's advantages, there's disadvantages to doing business that way. What we do is, like I said, we have that relationship that allows folks that want to take advantage of the benefits of a 1031 going through almost a lookalike process to get those same tax benefits and still be able to invest in the fund.
Okay, that was answered. And
I just answered Michelle. I'll answer it again.
oh, you answered Michelle? Oh,
look,
okay.
I saw they got this chat thing on the bottom there, and if you press the little button, you can actually talk to people. I mean, this technology is amazing. Yeah, Michelle Fitzpatrick. Hi. Yeah, it is. Our fund is created for accredited investors only. We looked at that at the beginning when we put the fund together. Accredited investors, as you know, SEC determines them as an individual with X amount of income, or a couple with a certain income amount, or a evaluation in their net worth, not including primary residence. Our team has been trained up to help our investors with that. It's amazing to me how many people say, I'm not accredited, and then they sit down with our team, and after 3 or 4 questions, we find out that they are accredited, and then they get excited at the opportunity to invest in the fund. The minimum investment is $100,000 coming into the fund. And again, we looked at that number, and here's why. At those numbers and at that accreditation level, it is a mature expectation, okay? You got to understand, if you look at our fund, or any other fund for that matter, what does it really mean? Sticks and bricks is sticks and bricks, like I said. Digit returns are digit returns. Repositioning is the same thing. What you're really doing is investing in myself, Walter, Kevin, Eric, our Chief Operations Officer. You're investing in the operators. You're investing in the team. So I learned a long time ago that business partnerships and relationships need a clear plan, if you will, or a clear expectation of each other. Open book, honesty, transparency, etc. So that's why we did that. That's why we used that number. And to be quite frank, $100,000, and I know some people are going to scream and shout, but it's not a lot of money. Can't retire on just $100,000. Can't even really buy a primary residence with just $100,000. Actually, there's some cars that you can't buy for $100,000. All right, so think about that for a second. So the ability to put that capital to work, the majority of our conversations are around the 250 to $500,000 mark, because people are sick and tired of the bond market giving them negative yields. They're sick and tired of the roller coaster of the stock market, and they're looking for alternative investments. And to have an alternative investment like this with a team like this, it's been exciting to see the response. I'm going to be very direct, Rick. People are like, I can do what? And I can do it with you, and I can do it when? Now? Right? And we walk them through the process slowly to bring them into the fund and execute. So yeah, accredited investors only.
All right. Well, we're coming close to the end of the webinar.
I'm just getting going. What do you mean we're coming close to the end?
We can go on all day, Dave. Where we're going to go next onto some of the stories from Flipping Boston. That was
that's a different webinar series altogether. I'll tell you this thing: if you saw the camera right? If you see me walking into a room and you see the front of me, and then you see me walking into the room and you see the back of me, but you don't see a camera in the front or the back, guess what? I probably had to shoot that 2 or 3 times. Just a little secret for you, a little insight, okay?
All I know is I saw just recently, I just saw one episode.
Yeah.
And you were putting up kitchen cabinets and you drilled the wrong holes in
Wasn't
for
me.
the handles.
That, you know what, that episode, just as a little sidebar, that was probably my favorite episode altogether. I was filming in East Boston when they bombed our marathon. And myself, Jermaine Wiggins, New England Patriots, and my ex-partner Peter, we went straight to fundraising and we raised some capital. And then what we did was we found a family that had physically been affected, and we rehabbed a house for them for free. It was all donations. It was such a cool episode, man. It really was. You know, we got donations of manpower, materials. It was amazing to see how many people showed up to help these folks who had, you know, one of the guys had lost a leg due to the bomb going off. So that episode is actually near and dear to me. And I didn't screw up his cabinets accidentally. We did it on purpose, and I had another door off camera ready to put on and replace.
Well, I want to thank you both and Kevin for doing this today. It was great information. Yeah. And I hope people have gotten the information they were looking for from this. Sure. You know, being a Boston guy, Dave, you're a Boston guy. And Kevin, wasn't he originally from Boston?
No, Kevin and Walter are actually Ohio guys, but we're not going to hold that against them.
Oh, okay. And now they're both in Tampa?
Isn't that it's a funny world. Yeah. When he and I first met, we started talking. We literally passed each other within about 3 weeks. He left Cincinnati when I moved there. So, and same thing coming down here. He beat me down here by about 8 or 9 years.
Yeah. It's funny. Tom Brady and Gronkowski and Antonio Brown, they all wanted to move down to Tampa as well.
That's right. That's because they know that they're investing with us, by the way. No. That's because they all wanted to get in on the action. See, there's football and then there's real estate investing, and real estate investing is a lot more profitable, a lot more exciting, and it lasts longer as well.
And you don't get hit in the head as much.
No, you don't. No, you don't. It's funny. I just connected with a New England Patriot through LinkedIn. One of the younger guys. We're trying to put some education together. Another passion for me is the fact of, you know, these young guys come into professional sports, you know, and they don't have financial guidance. And I speak from experience, you know what I mean? So the ability to get in there and talk to some of those guys and just share with them, you know, I got nothing to sell. You can't buy this, you know, you got to qualify for it. But the ability to share some financial education is part of our journey as well, for sure. So it's fun times. And I think the Pats won last night. We beat the Jets.
They did win.
Wow.
Just barely.
Imagine that.
But they did win.
Just barely.
And I don't want to say how poor the Jets are, but, you know, the Pats did win.
Yeah, they did. Yeah. Joe Flacco, go home.
So if someone wants to get a hold of you at Freedom Venture, Kaplan Investments. You know, we have the
little
website
sign up there
right behind you. And is there any kind of a contact number they can reach
there is.
you at?
Yeah,
or someone to talk to?
The contact number is 781-922-4418. 781-922-4418. If you do call that phone number, do me a favor, please. Tell the team member that you are calling from the New England Real Estate Journal webinar, and that you would like to connect either with me directly or with Walter. And we'll be able to take you into our back office where you'll be able to look at exactly what it is that we do. Chance to get a hold of our PPM, our private placement memorandum, and we'll qualify you, you qualify us. If you feel it's a good fit and we feel that you're a good fit for the fund, then we can move forward from there. So 781-922-4418. That's how you can get a hold of us.
And we've been talking with Dave Seymour He's the Chief Executive Officer and star of A&E's TV show, Flipping Boston. We have still Walter Novicky. He's the Chief Investment Officer for Freedom Venture Investments, who does not have a TV show yet, and he's still looking for one. And we had Kevin Harrington, who had to leave. He is the head of business development, and he's one of the original sharks on Shark Tank. And I want to thank you guys. It was a great interview, great information, and I wish you all the success in the world. And I want to wish everyone that attend have a wonderful day.
Thanks,
Thanks, Rick.